Hey traders, Raghee here. This is the Simpler Futures recap video for Friday, December 1st. Happy December, everybody. Happy Friday. What we're going to cover today is a choppy market setup. This is a recent trade in copper. And I like to cover the recent trades in these recap videos because one, it helps members. And two, if you're not a member, you get an idea of what's happening inside the chat room, inside the membership, and the kind of trades that I post on the spreadsheet within the members dashboard. So copper is one of those markets that, in terms of the metals, right now, most of my attention is on things like the 4 index futures. Metals are definitely have my attention right now. And energies. Energy is the other market that has my attention right now. So metals, meaning silver, copper, and gold. And I'm just now starting to get back into a little bit more of a day trading attitude on gold. So these are the 3 metals that I keep an eye on. And so when I'm looking right now at copper, copper is in a choppy market, as is gold right now, by the way. Copper is in a choppy market. And unlike gold and silver, which can be very sensitive to the risk environment, like today's I call it DC shenanigans, right? The DC shenanigans, gold and silver will be very sensitive to those typically. But copper is really more of an inflation and economic growth and expansion story. And copper had already made a low establishing the floor on this sideways market. So first of all, I'm not looking for ceilings and floors unless the market's moving sideways. How do I know it's moving sideways? Blue, green, red, blue, green. So what I have is a mix of psychology. How do I know I have a mix of psychology? Neutral, bullish, neutral, bearish, neutral, right? There's no dominant color. There's no dominant psychology. When I see dominant green, bullish psychology. When I start to see red take over, it could be bearish, right? But when I see a mix, like what we see right now, very easy visual call to say this is in chop. And then I let the Darvis, the automated support and resistance that I use, do the heavy lifting to identify the floor and ceiling, the range of this choppy market. When we put the low in back here, the Darvis formed. So we had this Darvis basically in place with the low that was created on the 17th, and by the 20th of November, we had the Darvis set in terms of the way in which the low is going to form. And then visually, this was set essentially on the 28th, 27th. Okay, so we have the low put in, which was just a standalone low, and then the Darvis kicks in with the resistance, and then the box is drawn. I think it's very important for me to emphasize this box was basically in place the 28th, the 27th. So by the time we get the retest on the 30th, we've already been looking at this low, this drawn box, for a couple of sessions. It's visible to us. It's easy to recognize. And that's where we put in a 3.0555 entry. So what this becomes then is an oversold buy. I will activate one of 2 indicators. The one that I've been using since I was a teenager is the stochastic. And I say teenager, I mean, I'm coming, and it's funny to think about this. I'm coming up on my 30th year of looking at these charts. And so here is what I look for. I'm looking for the same type of oversold market. Now, price first, right? Indicator second. Is the indicator optional? It absolutely is. I consider this the subchart. This is where everything happens. So you'll notice some price levels here. And let me show you what this is. So when we start trading certain contracts that a lot of our newer members have never traded before, I make sure that I talk about when the trading times are, what the margin requirements are, what the per tick value, etc. is. We make it really easy. You'll see here we put the info right on the chart. And this way it's really easy for new traders to familiarize themselves with what the heck it is that they're trading. And so you can see right here all the information. Margin requirements, etc. Now this is from TradeStation, but this is very easy to activate. So now I know, getting in at 305.55, if I were to take a very aggressive profit target, meaning very close, my risk is this, anywhere from about 38 to 150 bucks, and my upside is 600. Well, the trade that I set up on the spreadsheet within the members area was a move to either the mid-range or this 311. You see this 311.25 for a $1,425 win? That was our upside. Today, we hit a high of 1255. So that was easily taken out, and then some. But notice I gave 3 different levels. And those 3 levels really are for traders of, well, first of all, if you have multiple contracts, and 2, if you have a different risk tolerance. So some traders may not want to wait for as exaggerated a move as a midpoint retracement, which is just the halfway mark of the chop. One of the easiest visual upside targets within a sideways market to identify. So right now you are getting step by step how I trade choppy markets. This was a great win. We leave a proactive stop out there. So as we go into the weekend, we pay ourselves, and then at that point we can choose to get flat or move a 304.95 stop to 305.40, and we keep a very, very, very minimal amount of risk for the remainder of the trade and see if we can't continue to climb towards the upper end and perhaps the 320 level. We'll see what happens next week. Quick look at copper, fantastic trade, and I'm looking to see if we can't do this again. Maybe buy that 305.55.5 level once more. See you in the next update.